Have you ever stopped to think about just how fast the whole global financial world is changing? It's more than just small tweaks. We're seeing a really deep shift in how investments get managed everywhere. And that's exactly what we're going to dig into today. This is our deep dive into the global investment management solutions market. Right. So our job here is to pull out the really key stuff, the surprising bits from this huge forecast by Cognitive Market Research. They've mapped out revenues for, well, pretty much everywhere, 2021, 2025, and projecting way out to 2033. We want to give you the shortcut, help you really get a handle on this growth, what's behind it, and what it suggests for finance going forward. So maybe we should clarify first, what exactly are these investment management solutions? Think of them as the really sophisticated tools that financial firms use to handle the complexity of global capital. It's way beyond basic accounting. We're talking about comprehensive tech, digital platforms, specialized services, things that manage portfolios in real time, assess risk, run trading algorithms, deal with compliance, client reporting, the whole nine yards. It's essentially the digital backbone for asset managers in today's super fast markets. And the market for this stuff, it's absolutely booming. Globally, it was worth, about $5.5 billion back in 2021. By next year, 2025, that's expected to hit nearly $8.5 billion. But here's the really eye-opening part. By 2033, the forecast is for a massive surge to over $20 billion. That works out to a compound annual growth rate, a CAGR, of around 11.6%. Pretty impressive. It just shows how critical these solutions are becoming. Okay, let's unpack this a bit. Starting with North America, it's a huge piece of the pie. What's driving that massive lead? And are there specific trends pushing it?
Right. North America, and especially the U.S., is definitely the biggest slice. The numbers are quite telling. Back in 2021, the region was just over $2.1 billion. That's projected to climb to about $3.4 billion by 2025. And then look at this jump, nearly $7.9 billion by 2033, almost tripling from 2025. A lot of that is down to, well, mature financial markets, the sheer amount of assets being managed, and really high adoption of advanced tech. Think AI, big data analytics and investment firms. The U.S. on its own projected over $6.2 billion by 2033, just the U.S.
Wow, okay, so the U.S. is clearly the engine room there. What about Canada and Mexico? Are they seeing similar patterns or is something different happening?
They're smaller markets, yes, but showing really solid, consistent growth. It points to a wider regional trend. Canada, for example, started around $270 million in 2021. That's expected to clear $1.1 billion by 2033. And Mexico, starting smaller at about $134 million in 2021, is forecast to more than triple, hitting nearly $473 million by 2033. So yeah, it really suggests this increasing sophistication, this digitalization is happening right across the North American financial scene. Firms everywhere are looking for efficiency gains and better analytics. And what's really interesting, actually, is seeing this kind of growth pattern across very different places. Europe is a great example of this. The total European market went from roughly $1.5 billion in 2021. It's expected to hit $2.4 billion in 2025, and the forecast puts it near $5.7 billion by 2033. It really reflects Europe's established financial sector adapting to, all these new digital demands.
That's a pretty significant climb for Europe overall. Are there specific countries, maybe certain regions within Europe that are really pushing that growth, maybe showing different priorities?
Absolutely, yeah. If you drill down into the countries, you see strength pretty much across the board. Germany, for instance, shows very strong growth. It was around $260 million in 2021, projected to hit almost $890 million by 2033. That's a near triple. The UK, France, Russia, also big contributors, each one expected to see their market size multiply over this period. But what's also telling, I think, is looking at areas like the Nordics and other continental hubs, countries like Sweden, Denmark, Switzerland, even Luxembourg, show this remarkably steady kind of mid-single to low teens CAGR. It's not just about the raw size that points to this deeply embedded expansion. It's driven by things like, increasing regulation, but also that big push for efficiency and data-driven decisions in these very developed financial centers.
Okay, now here's where, for me, it gets really interesting. The Asia-Pacific region. The momentum there seems incredible. So APEC started just over $1 billion in 2021, hits around $1.6 billion in 2025, but then it's forecast to skyrocket to over $4.2 billion by 2033. Based on the research, what would you say are the main things driving that huge acceleration, especially in places like India?
India, yeah, cognitive market research highlights it as having the most robust Sage IR in the region. And it makes sense when you look closer. It started around $174 million in 2021, the projection.
Yeah.
Nearly $800 million by 2033. That's phenomenal. And it's driven by, well, multiple factors, right? India's growing middle class, the incredibly fast digital shift happening there, government pushes for financial inclusion. All that creates huge demand for more sophisticated ways to manage wealth and assets. We also see really strong acceleration in Singapore. It goes from about $33 million in 2021 to over $160 million by 2033. That reflects its role as a major regional financial hub, really embracing that cutting-edge tech.
Right, Singapore as the fintech hub. And what about the established players like China and Japan? How are they factoring into this APAC growth story?
Oh, they're still massive contributors, absolutely. China's market is set to grow from roughly $320 million to over $1.2 billion by 2033. That's driven by its huge domestic market, obviously, and finance becoming more institutionalized. Japan, similarly, projected to hit over $930 million by 2033. So while maybe their percentage growth isn't quite as explosive as India's right now, their sheer scale adds enormously to that overall APAC number. The whole region just highlights this diverse, rapidly expanding financial landscape across Asia, with everyone needing better tools for complex investments. And if we connect this back to the global view, it's clear this isn't just about the traditional power centers. South America, the Middle East, Africa, these regions are really emerging as significant contributors now, often for reasons quite specific to their own development paths.
That's a really important point. Can you maybe give us a bit more detail on how they're contributing? Let's take South America first. What's driving the growth there?
Sure. South America as a whole, the market size is projected to jump from about $370 million in 2021 to over $1.5 billion by 2033. Brazil's a key example here, forecast to grow from around $134 million to over $545 million. That really signals a strong push to modernize its financial infrastructure, plus, a growing investor base. And you see strong growth in places like Argentina and Colombia, too. It reflects this broader trend across the continent, maturing financial markets, using tech to kind of leapfrog older systems.
Okay, moving over to the Middle East. That region is also scaling up quite a bit. A lot of this is tied to economic diversification, moving beyond oil. The market there was around $200 million in 2021, projected to hit over $640 million by 2033. Saudi Arabia is a major driver, along with the UAE. Think about their ambitious national plans, big financial sector reforms, attracting more foreign investment. That all fuels demand for these solutions.
In Africa, often seen as, the next frontier, it seems to be making some really big leaps here too. What's behind that expansion?
Africa's growth is really significant, yeah. It reflects a continent that's transforming digitally at speed and also seeing greater financial inclusion. It started just over $114 million in 2021, the forecast. Almost $490 million by 2033. That's more than quadrupling. Countries like Nigeria and South Africa are really leading that charge. You've got a young, tech-savvy population, more foreign investment coming in, and a push for more formal financial systems. It just highlights the huge potential there as these economies build more sophisticated investment ecosystems. They often jump straight to mobile-first, cloud-based solutions, bypassing some of the old infrastructure hurdles.
Okay, so let's try to wrap our heads around this. What does all this mean for you listening in, whether you're deep in the markets, an investor, or just curious about where finance is heading? It means this whole global investment management solutions market isn't just growing, it's undergoing this really fundamental, widespread change, pretty much everywhere you look. We've seen the mature markets, like the US, staying dominant because of their scale and tech adoption. But then you have dynamic economies, like India, showing explosive growth thanks to demographics and digital readiness. And even emerging markets, South America, Middle East, Africa, they're adding substantial growth, often using new tech to build modern financial systems almost from scratch. And remember, all these detailed numbers, the projections, they come straight from that comprehensive work by cognitive market research. The sheer scale of it and the speed, it really hammers home how deeply tech is reshaping finance and how capital gets managed worldwide. So here's something to maybe mull over. Given this huge forecasted growth in these solutions globally, what might the knock-on effects be for tech innovation within finance itself? And how could all these changes actually reshape how we even think about capital and managing assets over the next decade or so? Definitely something to consider for your own deep dive. Have you ever stopped to think about this sort of quiet revolution happening, the one that's completely changing how money is managed around the world?
Oh, absolutely. It's not just small tweaks either, is it? We're talking fundamental shifts in how assets are handled, analyzed, optimized.
Exactly. And that's what we're getting into today. Our deep dive is all about this really fascinating, fast-moving investment management solutions market.
Right. This sector is, well, it's really pushing the boundaries of innovation, reshaping the whole infrastructure of finance.
So our mission for you in this deep dive is pretty straightforward. We want to unpack what's really driving this market, what's holding it back, the restraints, and of course, the cutting-edge trends shaping its future.
Yeah, hopefully you'll walk away with some, surprising insights, some aha moments.
Okay, let's start with the growth. What's fueling this incredible expansion and transformation? We're looking at research, including from cognitive market research here.
Well, there are a few key things. First off, there's just this huge growing demand for digital wealth management platforms.
You mean things like cloud-based apps, stuff that's easy to use?
Exactly. Think real-time portfolio tracking, automated insights, built-in analytics. Investors and advisors are actively looking for these. For efficiency, yes, but there's more to it.
What's the real game changer beyond just, saving time?
I think it's the ability to scale personalized advice. It's not just an upgrade. It fundamentally changes how advisors spend their time.
Okay.
So imagine, like, automated rebalancing, freeing up hours they used to spend doing it manually. Now they can focus on the client relationship or more complex strategy.
And for the investor?
It means much better transparency, immediate access to their whole financial picture. That used to be just for the really big clients.
Got it. Okay, second driver.
That's the simple fact of global wealth growth. There's a big rise in high net worth individuals, HNWIs, and just the total assets under management, or AUM.
Especially in emerging economies, right?
Particularly there, yes. And that growth directly fuels the need for these solutions. You need scalable tools, personalized advice platforms to handle it all.
Because manual just can't keep up.
Pretty much. Not with that volume and complexity, especially across different countries.
Which brings us nicely to driver number 3, regulatory compliance.
Ah, yes. The rule makers.
There's a much bigger focus now, isn't there? With things like MiFID II, FATCA, Dodd-Frank, firms are turning to digital tools to cope. Why are these specific rules such a big deal?
Well, they're not just minor updates. They demand incredible detail in reporting and transparency.
Okay.
Take MiFID II that needs super detailed transaction reporting for investor protection. Or FATCA, trying to find U.S. taxpayers hiding money offshore. Dodd-Frank aimed to stop another financial crisis with strict oversight.
So meeting these standards, it's almost impossible without digital help.
It's incredibly difficult. You need airtight audit trails, real-time monitoring. Digital tools make that feasible, ensure you're compliant.
Right. And the last driver you mentioned?
It's the demand for really customized investment strategies, very personalized approaches.
And firms are using AI for this.
Increasingly, yes. AI-driven platforms can tailor portfolios based on individual goals, how much risk someone's comfortable with, their long-term plans. It's getting incredibly granular.
How different is that from the old way?
Oh, it's a world away from the old one-size-fits-all model portfolios. We're talking potentially millions of unique, dynamically adjusted portfolios now, truly matching the investment to the person.
Which must build more trust, I imagine.
Exactly. Much greater trust and engagement.
Okay, so we have these powerful forces pushing the market forward, but it's not all smooth sailing. What are the main roadblocks, the restraints?
Well, probably the most obvious one is cost. The high implementation and licensing costs.
Especially for smaller firms.
Definitely for small and mid-sized firms. Enterprise-level platforms. They come with hefty subscription fees, integration costs can be complex, and just getting staff onboarded takes time and money. It's a big upfront hurdle.
Does that upfront cost ever pay off quickly, maybe for bigger institutions?
Oh, for large firms, absolutely.
Yeah.
The ROI can be huge, especially if they're replacing lots of old, separate systems with one unified platform. The efficiency gains are massive. But for a smaller outfit, it can be tough to justify.
Makes sense. Then there's the ever-present issue, data privacy and cybersecurity.
A critical one. You're handling incredibly sensitive financial data online.
So concerns about breaches, phishing, system weaknesses, that really undermines trust, doesn't it?
It casts a long shadow. The threat is real, and it's always evolving. Firms have to invest massively in security, robust infrastructure, multi-factor authentication, constant monitoring.
But it's still a perception battle.
It is. You need consistent, proven security over time to really build and maintain that trust. One big breach can set things back years.
Another challenge, integrating these shiny new solutions with clunky old legacy systems.
Yeah, that's a big headache for many established institutions. It's like trying to connect I don't know, state-of-the-art computer to a dial-up modem.
Huh, right. And the consequence.
Friction. Bottlenecks. Data doesn't flow smoothly, parts of the process stay manual, you don't get the full benefit of the new tech. It just slows down the whole digital transformation journey, makes it frustrating and expensive.
Okay, one more restraint. You mentioned the complexity of handling lots of different assets and currencies.
Yes, especially for global firms. Managing equities, bonds, derivatives, alternatives, and dealing with multiple currencies, different tax rules, varying compliance standards across regions.
It's a technical nightmare.
It's certainly a major technical challenge. You need really robust, adaptable systems that can handle all that complexity in real time. Translation, reconciliation. It's tough.
All right, let's switch gears. Enough about the problems. Let's talk about the exciting stuff. The emerging trends shaking things up. AI and machine learning for predictive analytics sounds big.
Oh, it's huge. The capabilities are really impressive now.
Can you give an example? Like something portfolio managers can do now with AI risk assessment that was impossible, say, 10 years ago.
Sure. AI can now sift through massive amounts of unstructured data. Think news articles, social media sentiment, geopolitical reports, stuff humans can't process quickly. It can spot subtle market anomalies or emerging risks in real time.
So it's like an early warning system.
Exactly. It allows managers to potentially pivot before a major market event happens, turn a potential negative into a strategic move. It's moving from just reacting to being truly proactive. That's the power of processing terabytes of data.
Wow. Okay. Another big trend. Robo-advisors and those self-service platforms.
Yep, they've really taken off. Especially popular with tech-savvy millennials looking for easy access and low costs.
So does this mean the traditional human advisor is on the way out?
I don't think so. No, not at all. But it is prompting a rethink of their role.
How so?
Well, robo-advisors are great for simpler needs, automated portfolio management at low cost. But human advisors are adapting. They're focusing on the higher touch, more complex stuff machines can't really do.
Like
Things like intricate financial planning, estate planning, complex tax optimization, and crucially, behavioral coaching, helping clients navigate market volatility emotionally. It's about specializing where human empathy and judgment really matter.
that makes sense. Okay, next trend. ESG, environmental, social, governance metrics, they seem to be everywhere now.
They're becoming standard, yes. Investors are actively asking for portfolios aligned with sustainability.
But there's a lot of talk about greenwashing. How do firms actually prove their ESG claims, make it verifiable?
That's the million-dollar question, isn't it? Moving beyond just talk, firms are increasingly using standardized reporting frameworks like SSB or TCFD, and they're relying on specialized data providers to get granular ESG data.
So they need the data to back it up.
Absolutely. Transparent methodologies, verifiable data points, everything from carbon footprints to labor practices. The market is demanding real accountability now, not just vague promises.
Okay, last trend. Blockchain. It's making inroads in investment management.
It is. It offers some really interesting potential, primarily around transparency and efficiency.
How does that work in practice?
Mostly through things like smart contracts and distributed ledgers. The idea is to streamline processes like settlements.
So transactions happen faster.
Potentially much faster, almost instantaneously.
Yeah.
Which reduces counterparty risk and cuts operational costs. It also enhances asset traceability, knowing exactly where an asset came from and who owns it.
So things like settling trades, maybe even tracking ownership of alternative assets?
Exactly. It could revolutionize how transactions are recorded, verified, and transferred. Lots of potential applications still being explored.
Okay, well, that brings us towards the end of our deep dive today. It seems crystal clear that the digital shift in investment management solutions is not just happening, it's accelerating. Fast.
Undeniably. And it's fascinating to think about how these technologies aren't just changing how we invest.
But maybe even who gets to invest.
Precisely. It's potentially democratizing access to financial markets in new ways. But at the same time, it's creating these new challenges we talked about around trust, security, regulation.
So a final thought for you to mull over. What does all this mean for the future of personal finance? And thinking about your own situation, what role might you play in navigating this, whether you're an investor, an advisor, or maybe even someone thinking about innovating in this space yourself?
Lots to think about there.
Indeed. Until next time.